Namaste, welcome to Arthaniti. This Monday evening, being the first week of the new financial year, I want to remind you of an annual core which is necessary to be done by all of us to avoid paying tax if it is not applicable to us. Yes, I'm talking about submission of Form 15G and 15H. Now, what are these forms? I will tell you in the video as we progress. But we keep our money in the form of bank fixed deposits or say in fixed interest earning debt instruments like corporate debentures, bonds, etc. Right, part of this money is kept in these relatively safer instruments. What happens is the bank, in case we have a bank fixed deposit, normally deducts TDS if the interest income that we earn on these fixed deposits is above 40,000 rupees in a financial year for a resident individual. Now, this threshold limit is 50,000 in case of a senior citizen Indian resident. Correct? Now, when bank deducts TDS, and say our total income is below the threshold limit, say of rupees 3 lakhs as per the new tax regime and 2 lakh 50,000 as per the old tax regime, we are unnecessarily taxed. Correct? When our income does not fall into the limit where we are, where it is we become liable to pay taxes. Now, in this case, what happens is the bank deducts the TDS. At the end of the financial year, we file our income tax returns, which get processed in due course, and then only we can claim for a refund. It is a long, lengthy process. Alternatively, if you know that your income is below the threshold limit, I told you the limits: 2,50,000 in case of old tax regime and 3 lakhs in case of new tax regime. If your incomes are below that limit, no TDS needs to be deducted. How is that possible? Well, that can be done by submitting a self declaration to your bank under Form 15G or Form 15H as is applicable to you. Correct? Now, what is Form 15G? It is applicable to individual residents below the age of 60, and Form 15H is applicable for senior citizens above the age of 60. Correct? Now, when the finance bill for the year 2023 was passed, some amendments were made in that bill. Now, as per these amendments, TDS will now be deducted on any listed debt instruments that you hold. In the sense, if you have invested in some corporate debentures or bonds, TDS at the rate of 10% will be deducted by these companies in case your interest income is above 5,000 rupees from these investments. Correct? Again, if you fall within that threshold limit of income tax, you can submit Form 15G and Form 15H to such corporates and avoid getting taxed at source. Correct? I told you about the limits of income as per the old and new tax regimes. Correct? There was another amendment regarding income that can be tax can be rebated up to the level of 7 lakh rupees. This amendment was also passed when the finance bill of 2023 was passed. What this means is this rebate of income tax is available up to 25,000 rupees if your income falls up to 7 lakhs or just above. In the sense, if you have that level of income, you can still file or submit these applications in Form 15G and 15H and request your bank or the company with whom you have your investments to not deduct TDS at source. If you do not do it, then you will unnecessarily have to wait for the whole year, submit the income tax returns, and then claim the TDS. If the provision is available in law, why not make the best use of the provisions and avoid getting taxed at source if you are not eligible to pay that tax, correct? So check with your banks, check with the companies in which you hold debentures or FDs or bonds, and submit this form 15G if you are below 60 years of age, and form 15H if you are above 60 years of age. Now this form can be submitted in hard copies as well as electronically. So get in touch with the banks and the corporates with which you hold your debt instruments, and take advantage of these forms and avoid unnecessarily getting taxed, correct? New year, annually this score needs to be done. Why? Because the validity of form 15G or 15H is for just one financial year, so you have to keep on doing it every year. The sooner you do it, the better it is. Why? Because then no TDS will be deducted by the bank or the corporate with which you hold your investments, right? So I hope this is a reminder call to do this necessary step and earn your interests in full, correct? Any queries you have, please feel free to comment below the video. I will be happy to help you. Thank you.